All right, guys, we're back. Charles here with my good buddy Jose, Isaie. Again, we work in the fields of real estate, mortgage, and insurance. We decided to come back. I know we're a little late, a day to be exact, because this group is called Mastermind Mondays. We decided to go ahead and create this to go ahead and give a good bit of information to the Laredo community. Again, a day late, but we're here. And so I guess it's Mastermind Tuesdays.
I mean, I think we've only done a Mastermind Mondays once. Every single other one has been either on a Friday. Or on a Tuesday. So,
okay, so in other words,
Mastermind weekly, I guess.
This is your weekly Mastermind session with your local real estate, mortgage, and insurance professionals. So we decided to come back, give you guys a little bit of information. We're going to start off with do's and don'ts. And I think I want to hit Isaie with some questions today. Okay.
Finally, I get first place this time.
Well, you know what? You're first place in my heart, so.
That means a lot, Charles.
Yeah. Yeah, I mean, Jose was there.
He's not lonely either, right?
It's okay. I'm not jealous. Don't worry.
It's okay. Okay. Anyways, just playing around, guys. But let's start it off with some good questions. Okay. This is a question that I've had for the longest time. I've always wanted to know this one. And we totally didn't pre-rehearse this. Isaie, can you explain to me what is the importance of, well, actually, no, do's and don'ts, right? Should I go with a reputable insurance company for my home insurance, car insurance, and life insurance, or can I go with a mom and pop insurance company? Because me personally, I don't know the difference, and I really want to know what's the benefit of going with either or.
Okay, I mean, the do and don't of that, it's kind of in a complicated situation. But if you want my recommendation and my advice, it's don't go with those pop and shop companies.
You mean mom and pop companies?
Yeah, your own pop. Your own pop companies. The reason why I say this, it's because, it depends what kind of service you want. It's like if you go to a store, any kind of store, it can be a retail store, any grocery store, depending on the service they give you, or a restaurant, right? Depending on the service they give you, that's what you're gonna be paying for that, and that's what you're gonna get. So if you get one of those insurance companies that are just, and I'm going to explain it like this so we can all understand it, that there's a ranking system with each company. There's those companies that have a ranking system of A+, and you can look that up on Google, whatever company you want to look up, it'll tell you the rating. So there's companies that are A+, which means best service, best claims assistance. You're going to get fast service. So you want those kind of companies. If you want great service and you don't want to be, if something happens, you don't want to be like, having a hard time. Okay, so then there's the A companies, the B+ companies, B and C+. For me, my recommendation, I don't offer anything that's C+ and lower. I offer anything that's A+, A, B+, and B, and it just, you customize it to what the customer wants. And that's the most important thing. It's what, you guys want. But my recommendation is don't go with those insurances, or don't have your mindset just set on those insurances. If you gotta pay a little bit more, it's gonna come, with a great, with a great outcome. If there's a claim, you're gonna have that assistance. You're not gonna be, having a hard time.
So follow up on that, I want to ask you a question. What is the price difference? Is it a big price hike, going from a B to an A+?
That's a good question. I sometimes get, and insurance is really based on claim history, credit, and it's also on credits with non-pay history. So, and how much you jump around to insurances. So the less you jump around, the more experience you have with an insurance company, it gets you a better rating when you want to change.
Did not know that.
Yeah. Wow. So credit as well. If you got good credit, they'll give you a good price as well.
So if I got good credit, that helps me as far as my as far as my insurance price?
Yeah.
I did not know that either.
Yeah.
Okay.
And
I'm sure they also measure, like, let's say car insurance, they measure how many accidents you've been in or how many claims
exactly
you've had.
claim experience. You know, if you don't have claims for 5 years, there's a lot of companies that give you the 5-year claim free discount. So I mean, that's, you wanna, all the insurance companies, the reputable ones, will give you a good price if you have all these three things, and they can even be a better price than those other insurances. So
Okay.
it just depends. Yeah.
Okay, so do go with a reputable company. Don't necessarily go with
The cheapest
the
company.
cheapest
C
company,
plus and lower.
because
Yeah.
you get what you pay for.
Yeah,
Okay.
that's exactly
Okay.
right.
All right. Any other questions that you might have, Jose?
I think that was a pretty good situational do and don't.
Yeah.
Let's
Okay.
look at another one.
I can't think of anything, so I will pass it over to you, Jose.
Okay, you want me to ask you, or how do you want me to
It doesn't matter. We're gonna go around the table. We're gonna get good information for the viewers at home. So
Okay,
Okay.
let's keep it with situational.
Okay.
You're the real estate expert, and this is situational for, I guess, for Laredo.
Okay.
Right. If you know your zones in Laredo, you know kind of where the market is. But let's say I think that right now the hottest market would be San Isidro, that area. Would you say?
You could say that. You could say it's a very hot market. Yeah, anything in the north side. People,
Okay.
everybody, that's the common consensus when it comes to real estate. Everybody wants to live on the north side. So yes,
Okay.
you can say that.
But regardless, I mean, the south side still.
Oh, south side is still growing. It's still
It's great,
It's
right?
it's great. They're building wonderful subdivisions. So I'm not hating on the south side. I like the south side. I grew up on the south side. What I'm
Well, we
saying.
can't redline, so. So obviously, yes. I mean, and I
Now,
would
if
say
you live by the river, right next to it, I'd probably say, fair warning. No, I'm just playing.
You're joking.
I'm just kidding. I'm just kidding. No, you
But-
can live anywhere. At the end of the day, you can find good houses
Yeah.
in any part of Laredo. You can find good deals. I don't ever steer clients to go to one direction or the other. But a hotter topic right now would be the north side. San Isidro would be a safe area to say
Okay.
it's hot. Yes.
let's say I'm in the market for a home. I see a home listed at 280 in that area, and you're my realtor, and I tell you, hey, I want to make an offer below asking, 275, and I want to ask for 5,000 in closing costs. Is that a do or is that a don't?
I would say that's a don't, right? Isaie went ahead and brought up a subject earlier. He said, you can go ahead and make that decision, right, when it came to insurance, but he does not recommend it. So at the end of the day, we're the real estate experts. I do as my client, he's the boss. I do as my client wishes, but my recommendation as the expert would be don't. Reason being, you get what you pay for, right? So in this particular case, the market has been changing. In the beginning of January, you could still see, based on previous results of offers being made and houses being sold, that the houses were selling for, let's say, considerably above asking. When we reached February to March, that number above asking it got a little bit less, right? It wasn't so exaggerated as before. And now we're in April, May, steering on towards June. Now people are not paying less than asking, but they're paying at least asking, right? And how are they making their offers more attractive? The way that they're doing it is not asking for seller concessions, not asking for help with closing costs. So if your offer is less than asking, you're already at a disadvantage because everybody still has a mentality of at least paying asking. If you're asking for seller concessions, other buyers are trying to make their offers attractive and they're not asking for seller concessions. So if, let's say you, Jose, presented that offer for, let's say, a client of mine that was selling their home, I would create a grid. I would put the strongest offers in the beginning, of course, because I want my seller to see what are the good offers, right? And your offer would probably be at the end. With that being said, you get what you pay for. You probably wouldn't get it, right?
Yeah.
So that would be a don't,
Okay.
in my opinion.
Okay.
Yeah.
Nice. Good explanation.
Thank you. I try my best because I feel the pressure with this man over here. I mean, he's and his very detailed explanations. So I mentally prep myself to beat him every time. No, I'm just playing. Okay, now I'm gonna toss it over to Jose. What do you think, Isaie?
Yeah, I mean, I got a question for Jose, I mean, I've heard this question, and sometimes, I also would ask it if I were in this situation, is saying, hey, Jose, like, what do you recommend? Like, it's going to be a situational, because I know Jose likes those.
Is it going to be a do or don't?
It's going to be a do or don't
Okay.
situation. Okay, so this is a situation. So I work, I have a spouse, she doesn't work. I make about $35,000 a year. Okay. And I want to purchase. I've been renting. My rent's been $700 a month. Okay. And I've been wanting to purchase a home, but I've already gone with a couple mortgage or people that tell me that I don't make enough. So I want to add one of my parents to help me as a co-signer to help me purchase a home. Is that a do or don't? Should I get them?
Okay. Well, that's a very tough question, right? Because it all depends on the situation, right?
Mm-hmm.
Obviously, a non-occupying co-signer
Mm-hmm.
will help you be able to get approved for a loan, right?
Okay.
But it just depends on the client, right? Obviously, if let's say for example in this case, if they're just missing the mark for a few dollars for their debt to income,
Yeah.
and you can see that that they'll be okay with it.
They have good payment history.
Or maybe they have maybe a cash business, a little small business that that they're still making some money, right? Or the wife, maybe she technically doesn't work, but she cuts hair. You know what I mean?
Or bakes on the side.
Or bakes on the side, and she ports very minimum on a 1099. Okay, then that's a situation where, you know what? Let's talk to your parents, or let's talk to your relatives. Let's see. Let's first of all give them the implications on what's going to happen to their credit, right? Because at the end of the day, now it's going to affect them for future credit worthiness, right? For future transactions, right? That's going to be a hit on them.
Okay.
So it's definitely a kind of a middle shaky ground. Now, for example, if the main borrower is a self-employed and you're looking at their cash flow and you're seeing that they're making plenty of money, but they're just reporting a little bit less because that's what they do, right?
Yeah.
They want to pay as little taxes as possible.
Yeah.
And they have somebody that could be a non-occupying co-signer that understands the implication, then that's a do.
Okay.
Right? You can do that. But if it's somebody that, hey, you only make $30,000 a year, and you have no extra income, and you want to put grandma in there because she gets let's say a retirement check or something, and it's really not gonna be it might affect you. The ability to repay that loan is not going to be fully there. I would say it's a don't, but at the end of the day, I would just like Charles said, I'm not the boss here. If they're telling me that they give consent, definitely we can do the loan, but it's morally it's a don't. You know what I mean?
Something you don't recommend.
You just want to kind of advise on them in that case. That's the way I see it.
Okay. Well,
any more questions for me?
I think we're going to keep this mastermind session short.
Yeah.
Right?
Yeah.
We don't want to overwhelm the viewers at home with too much information, but they did learn today that there is a grading system when it comes to insurance, right?
Yeah.
If you get the top rated companies, you're going to get the best service, a quicker response when it comes to making claims. We learned today in real estate that your offer does matter. Even right now in this current market, you still want to make a competitive offer if you want to go ahead and win your home. So win your future home, I'm sorry. So that could be making an asking price, maybe not asking for seller concessions. That may hurt you, right? And we also learned, as far as Jose, can you go ahead and just summarize your question? It was a little bit detailed.
Basically, there's a moral middle ground on every situation. Every client is different, but obviously non-occupying co-signers are definitely, you know, a way you can go if sometimes the numbers don't make sense, but at the same time it has to make sense, right? The loan has to make sense.
yeah.
Right?
Yeah.
You don't want to put somebody into a house that they really can't afford.
I
Exactly.
like that more.
Yeah.
Yeah.
You gotta
More
have
on ethics.
moral and ethics goes a long way. It goes a
Yeah.
long way in every field. So it pertains, as Jose said, it pertains to your particular situation. If the numbers make sense, you can go ahead and afford that house, and the loan makes sense, and you also have consent from that non-occupying cosigner. Then yeah, I guess it can work out.
I think this format of us just giving kind of like small nuggets of information for the clients is perfect. Yeah, you know,
I think
one
so,
little
too.
nugget each.
Yeah, one-
This is a 3-piece nuggets right here.
Okay.
I
Well,
like the word nougat better.
right now, I haven't eaten breakfast at all, so I'm talking about 3 pieces and